Hey friend, welcome back to the VIP Financial Ed channel. We've got a real doozy here for you today. My name is Matthew Pillmore. If you're new to the channel, consider subscribing below. Can't wait to hear the best comment from today's video because we're going to be talking about how to actually rent properties like a professional here. I've got a technique here for you that I learned a long time ago, which can actually increase the value of your properties by as much as 6 figures. And if you do this on enough of them, it could mean the difference between $1 million or more. So I'm gonna give you 2 hacks. Now this is a 2-part process, and renting like a professional goes way deeper than these 2 techniques, but I'm gonna start with these, and I'm gonna show you just how meaningful the impact is gonna be. The first thing I wanna talk about are pets. Now, as a landlord, I allow pets because pets can mean the difference between a lot more money. So the first thing I do is I always expect a non-refundable pet fee to be collected at the time we rent to anybody with pets. Now let's talk averages. On my investment properties over the last 15 plus years, I've managed to keep tenants on average for at least 3 years, sometimes longer, sometimes shorter. When I owned a 4-plex, it really brought that average down. In my single family homes, I can often keep tenants for much longer than that, but we're gonna stick with the 3-year average for now. The average tenant also comes in with 1.5 pets. Now, here's the thing. We also will be looking at not just the $500 per pet fee, which again is non-refundable, and we call it a fee, we don't call it a deposit because it is non-refundable. We're also increasing the rent on a per pet basis by $50, okay? No matter what the pet is, we're charging $50. When we increase on an average of 1.5 pets per tenant, we're obviously looking at roughly $75 per month in added income for that property. Again, since we're speaking on averages, some tenants may not have any pets, other tenants have had 4 or 5 pets. So we know that through the life of home ownership on this specific rental property, we're dealing with realistic numbers. Let's go ahead and segue this into the second part of this equation, okay? If we were to look at the base rent of, say, this property, which is a rental property that I own outside of Denver, Colorado, in Morrison, beautiful area where Red Rocks Amphitheater is located, this property brings in a base rent of $2,400 each month. After the pet averages, including the fees, which again spread out over 3 years, total $750 or $250 each year, we're looking at an increase from that $2,400 base to now $2,495. I'm gonna actually give my tenants the empowerment to choose how they want to pay their rent. So this is obviously very popular because tenants love choices, and you can actually give them the choice. Do they want to pay just one time per month, the $2,495 average for their base rent along with pets? Or would they like to break that number in half and pay it every other Friday or every other week, right? Whether it's Mondays or Fridays, however you choose to do that, it would actually total that 13th payment, 13th full payment, because you'll collect 26 half payments. When you're dealing with 52 weeks in a year and they're paying every other week, that's 26 half rental payments, and they will end up actually paying more. Now, this is obviously very clearly explained in the contract. We're not trying to be deceptive and withhold this detail that they'll end up spending more money, but there is an extra full rent payment throughout each year when you do it this way. Now, let's take a look at those numbers. I've got them set aside here because this is really pretty interesting. If, for instance, I'm collecting $1,248 every other Friday instead of that $2,495 one time per month, basically, I'm able to take that money and treat it as if it wasn't mine to begin with. I'm not putting it into my back pocket. I'm actually applying it towards the principal of this home. And by doing so, I will have increased my earnings by $24,725 from just the pet charges and increased rents, and over $53,000 by earning 26 rent payments each year for 21.5 years, which by the way is the now new length of that loan term. The loan is now condensed from 30 years all the way down to 21.5, so 8.5 years have been shaved off. That house will have in total generated for me an additional $78,367 more over the exact same period of time. And here's where things get even better. The best part is by using the extra money in ways taught similar to the How to Own Real Estate with No Loans training. We'll go ahead and link that in the description below if you haven't seen it. It's one of our most popular trainings and gives the mathematical breakdown of how this works. This specific property would have cost a whopping $515,000 originally in principal and interest costs. That's on a 4% loan amortized over 360 payments, that's 30 years. And instead, it will now cost $68,000 less in total interest costs, which means that our net improvement between the added income of almost $80,000 along with $68,000 in prevented interest costs is $146,000 in increased value from one property alone. Now imagine doing that on 10 properties, and imagine doing that over a 2-decade period, right? If you're 40 years old now and you do this until you're 60, you could very easily see 7-figure improvements from the exact same ingredients, folks. This is the same tenants that you may have already been renting to anyway. You're just giving them the empowerment of a choice. And not only does that choice benefit you financially, but it gives them greater levels of satisfaction that they're not going to get from other landlords. And when you can do that, you hold on to your tenants longer. Your retention rate is better because they see the difference in how you're choosing your overall landlording style, your management style, compared to other options that they've experienced in the past. So all good things come from this process. Not every tenant is going to choose to pay every other week, but it does help them in how they choose to manage their finances. It's much easier to manage a once every 2 weeks payment that's half as large versus a once per month payment that's twice as large for most households. Most households struggle with cash flow. It's been said that roughly 70% of homes don't even have access to $1,000 extra. So this gives them an ability to be a little bit more careful about how they're choosing to manage their money, even though it's more expensive in the long run. So this is just some food for thought. Guys, I can't wait to hear your comments below. How do you choose to rent your real estate like professionals? Give me some other hacks. I'd love to share this stuff. Let's go ahead and open up the dialogue. Also, again, drop a like on this video if you want us to continue to give you guys these little secrets. I love this stuff. I eat this stuff up. If I can have one easy little trick like this, have a $100,000, $150,000 impact, and it doesn't take me any more time than what I would have done already anyway. It's maybe just a quick conversation with the tenant. That's fabulous, right? And so if you guys like this stuff, make sure you give it a thumbs up because this lets us know how to organize our videos moving forward. And it also lets YouTube know that this video is popular. So more people will get to see it. Also, comments below are eligible for the contest. If you're unfamiliar with the contest that we're running up to October, go ahead and read the description below for contest details. I'd love for you to be next week's $25 Amazon gift card winner. So make sure that you remain eligible by participating and interacting with the community. Guys, thank you so much for being a cash flower. We certainly appreciate you. Can't wait to continue to help supercharge your roadmap financially. Until we see you on the next video, make it a great day today and take care.